and very good afternoon. You're watching India Market Close, and it's not been a bad day for the markets. No fireworks, I will say that for you. But the Nifty holding up above the 25,000 mark. Very, very narrow range of movement in the markets that we've been seeing, pretty much flat. Let's just pull up the Nifty intraday to give you a sense of what kind of a day it has been on the benchmark. Yeah, not too much action per se for the Nifty as well. So jagged sort of a chart over there that you can see. Very narrow range between the lows and the highs of the day. And that's really largely been the story. We'll pull up the heat map to give you a sense of what has really been the mover in this market. And it's very tough to see one clear theme. Shriram Finance, which is one of the losers yesterday, laggards yesterday, is up there. SBI Life. So your insurance space is seeing some kind of action today because SBI Life, HDFC Life, all of them are there. Maruti is the interesting story after comments from RC Bhargav at their annual general meeting. That stock is zooming. Their EV range is going into production. They're hammering down on the small car as well. So some of that commentary has been positive. L&T is seeing a breakout over there, up 2%. If any of you all caught the India Market Open show this morning, Rajat Bose had come and said as one of his last comments on the show that watch out for L&T on the charts. Well, one way or the other, that stock is up about 2%. Some action in the private bank and BFSI space. So Axis, ICICI, Bajaj Fin doing okay. ONGC as well. On the losing side though, some of your consumables tightened down 2%. HUL has got a 900 crore GST notice for their GlaxoSmithKline purchase, and that has probably dragged down the stock a bit. So is NTPC. Just one stock I'll talk about before I hand it over to Hersh for the broader markets is Z. Those flashes on your screen, and Z we should show with an intraday chart of what is happening here. 9% up in the last few minutes. As we were counting down to the show, that stock moved from 4% up to 13% up and is now about 9% up because they have now mutually terminated all transaction documents with Sony India. So that whole space is probably behind them. But yeah, Z is the buzzing stock this afternoon.
Well, absolutely Z a buzzing stock, Tamanna, but let's pull up where the mid-cap and small-cap indices lie. Definitely some bit of outperformance seen in both those indices, reversing some of the underperformance seen yesterday. Clearly 0.5% higher on both the mid as well as the small cap. Small cap slightly above 0.5% as well. So good strong cues coming in from broader markets. In terms of just general buzzers, we've seen quite a few names. We're seeing Tata Elxsi up 13.5% in trade today. Z we spoke about. JSW Infra on a positive note up 7% in trade. You're also seeing a Godrej Industries see good traction, 6.5% odd higher. So those are some buzzers on the mid-cap side of things. On the lower side, or rather negatively buzzing, Syngene, PV Fintech is lower, 2.5% odd. What a run that stock has had. Some bit of correction likely. Prestige also down roughly 2.5% odd. Now that's of course the Nifty mid-cap. And in terms of the small cap as well, we've got several buzzers in trade. You have something like a Tata Investment, which is up 20%, locked in upper circuit. KFin Tech is up almost 14% in trade today. Wonder what's happening there. CESC also up nearly 9%. So those are some buzzers within the small cap space. Outside of that, you're seeing Minda Corp, Affle, Concord Bio, all anywhere between 2.5% to almost 6% lower. So those are some of the other names which are in focus. Let's quickly move across to some big movers on the back of deals. Yesterday, we had a slew of them. Something like a MedPlus Health up nearly 6% in trade today after good traction. Warburg Pincus completely sold out, almost 11.5% stake sold out by Warburg Pincus, all absorbed, which is impressive. CMAC also very similar, up nearly 5%. Tata Tech had a couple of blocks early today morning. That one is also a buzz, nearly 4.5% higher. So those are in focus. There's something like a Datamatics up 20%, newsworthy again, and we'll talk about that stock. MediAssist, I want to just cap this off. MediAssist up 8+% after they've purchased after they've made a purchase of a competitor. So clearly you have several buzzers in trade today. JSW Infra was one of the other ones.
Charu, right now, Hersh, who has all the latest on the Z Entertainment story that you're seeing. They have approved settlement of all disputes with Sony India with regard to the merger scheme, and Charu's joining in with more on the story. Yes, Charu.
Hi Tamanna. So as we all know, the infamous Z-Sony merger, what has happened now is that all the litigation, all the pending applications, claims, counterclaims, all the dispute that was happening after this merger was called off has now been terminated. Now ZEAL has put out an exchange filing where it has said that this comes from a decision of a mutual understanding as well as a discussion with their boards of directors. What is more important to note here is that a termination fees of almost $90 million was supposed to be imposed on the party that would have been the reason of calling off this merger. Now, since there was a dispute, it was not really clear who would pay this fees. Sony had alleged that Z would be the one paying it. Now, after some mutual discussions, they have called off this entire dispute about paying the termination fees as well. And all the proceedings before the International Arbitration Center of Singapore, that is the SIAC, have also been called off.
So that actually is the reason you're seeing that stock spike. One is the end of a very, very messy chapter in the the Z-Sony saga. And the other is that both sides have decided not to take each other to court on the surrender value and, the $90 million penalty. So that has been a huge relief for Z. So that is one stock completely buzzing in trade. The other one, of course, Hersh's REC and PFC. That we discussed, because the regulations which were coming in on infra investments, remember, had a chilling effect on whole spectrum of BFSI counters, especially RFC, PFC, and now media reports that there could be some relaxation there.
Some relaxation, but also with regard to the standards, the accounting standards that they follow. Mind you, REC, PFC both follow the older the newer Ind AS accounting standard, and therefore ideally the impact on them was extremely limited. Of course, the move likely because of the news and also possibly positive sentiment, because the fact that the regulator is possibly just cooling off on that very hard stance that they've adopted over the last at least 2 quarters. Maybe that also driving the stocks higher, but clearly positive sentiment on both of those counters. Mind you, 5% was the provisioning number which was required at the time when a loan was sanctioned. So that provisioning may not be required, and in any case for those following Ind AS, the impact was even more limited, and therefore some of those stocks buzzing in trade on the back of that news, but impact may not be as large as some of the moves that we've seen today.
All right, Kush joining us this afternoon of kushbora.com. Kush, very good afternoon to you. We've managed to stay above 25,000, but that's pretty much it. Stuck in that little bit of a range. Where are you seeing the resistance coming in from?
Hi, Tamanna. First, a very good afternoon. Greedy, but greed is good, isn't it? We do want the markets to perhaps keep making new highs every day. I'll take this move. The fact that we're sustaining above 25,000 is a very welcome move. Remember, yesterday we had this discussion that, apart from any global factor right now, my only concern for the near term, and by that I mean just the next 2-3 days, till the expiry, goes by, is that, we might see some consolidation with a positive bias. And that's exactly what the markets are doing. So as I said, I'll take this with both hands. If you've got a long position, continue to hold. I do believe that markets are ripe for, a move towards 25,700, perhaps even at 26,000. So, hold on to your long positions. Any dip should be taken as a buying opportunity. So on the whole, constructive. This consolidation is a healthy thing, and perhaps just might be till the expiry goes by.
Okay, what would be the stance on the bank Nifty, Kush, this afternoon?
Again, very similar. I have a feeling that, bank Nifty after this underperformance might continue to, shine, or might actually, actually take the, I wouldn't say the lead, because I'm a little skeptical. IT and a couple of other names might actually be the leaders, so to speak. But bank Nifty could do a very well, supporting cast kind of a role. And even that is, a welcome move considering the kind of weightage that it has on Nifty. some of the key stocks in the private space are either starting to consolidate with a positive bias, or perhaps even starting to move up. My only worry comes from the PSU names, where apart from, let's say, an SBI, which is also consolidating, not too much traction is visible. So while HDFC might continue to consolidate for some time, the likes of perhaps a Kotak or even an ICICI could take some charge and lead the index higher. If the PSU banks do decide to join the party, then I think the rally will actually be a lot faster than what most of us are even anticipating. So on the bank Nifty, I think 51,800, 52,200 are the immediate levels to watch for.
Okay, so those are levels. Kush, your calls for this afternoon?
Sure, Harsh. A couple of them. We did discuss these calls during the FNO show. Markets consolidating, these stocks also consolidating. So the calls remain the same here, where ICSL Lombard, after the kind of stellar move, we are seeing a bit of an uptick here also continue. So from a near-term perspective, 2175, 2225 is the target. 2080 is where you place your stop loss. From the chemical pack, SRF seems to be turning a corner. This is the first day after a while where it's spending the entire trading session above its 20-day moving average. So this uptrend could continue on SRF. 2650, 2725 targets, 2525 is where you place your stop loss. One quick update on a stock that we discussed on Friday, which is HDFC AMC. Now, usually we discuss an update when the stock hits, either of the targets or the stop loss in some cases. But, this one hasn't really hit the target. We'd perhaps given out a 4.5-5% kind of a target when it was close to 4,400. The stock has continued its uptrend, given a breakout above the 4440 resistance mark. So if someone's not entered yet, it's still a good time. Perhaps you could consider a second target of 4775, 4250 being your 4250. Yes, correct. 4250 being your stop loss. So HDFC AMC on the move. If you've missed the bus, I think still there's a lot of upside left.
Okay, still bullish on HDFC AMC. Let's switch focus. Datamatics, it's hit an upper circuit in trade after the company joined hands with Microsoft to build AI solutions through co-pilots. Rucha joins in with the details, because this one up 20% in trade. How's this going to impact the company in terms of the business, Rucha?
Thanks, Hersh. So as you rightly mentioned, the company is in pact with Microsoft to develop its own co-pilot solution. Now, this will focus on process automation to accelerate business transformation of the organizations which are client. Now, talking about the onboarding, it has onboarded a co-pilot on the Microsoft Teams app. Now, how this works is it has launched this co-pilot, which integrates Azure OpenAI with the Datamatics Intelligent Automation platform. Now, this news came in at about 12 o'clock, wherein the stock moved up and hit an upper circuit at 20%. However, how much will this contribute to the revenue is not defined by the company. But moving our focus to the recently came earnings. Earnings were pretty bad. Revenue was around flattish. Now, this was largely because of weakness in the US and the European markets, is what the company had also mentioned. Talking about the second quarter guidance, the company expects to grow top line, not flattish, which was there in the first quarter. Talking about the EBIT margin, it expects this to expand by around 150 to 200 basis points. The deal wins also in the first quarter came in muted at around $170 million versus $200 million in the previous quarter. But the company does expect to take an uptick in the second quarter based on the deals which are in the pipeline. Talking about the stock performance, the stock has given 25% return in the last 1 year, but is largely muted in the last 6 months. Back to you.
Absolutely, largely muted in the last 6 months. In fact, year-to-date returns negative 10% even after the upper circuit we are seeing today. Kush, I know it's locked in upper circuit, but any thoughts at all on what to do next if you were to make a trade on Datamatics?
Well, first up, you have to just wait for tomorrow. I mean, you have to actually wait for tomorrow because of the upper circuit that's locked in. But even otherwise, because 680 is a resistance zone. If it does indeed tomorrow, cross this level and it's not locked in upper circuit, then you get in and you play for the positional target of 775. That's the previous swing high. About there is where the stock could head to. On the downside, I think there's a support zone near the 620 mark. So if it does sort of trade in between that range, just above 680 or somewhere close to those levels, you could get in and keep a stop loss near the 620 mark. Heavy volumes, big move today, but the stock was consolidating for a while, so this move doesn't really spoil the momentum indicators. In fact, it just probably sets them in the upward trajectory.
Right. Kush, another set of stocks which have been consolidating, and we spoke about that, Tamanna, myself, are the REC and PFC, which is the lending twins of sorts. When I'm looking at the last 3 months or so, they've been in a range of sorts, except for one blip that we saw. Any thoughts with regard to whether you would wager a trade on any of these?
I would. The reason being that you rightly pointed out that there was this a shortest phase of consolidation that was going on. Some of these were looking for a trigger to move up. The news that has come out today might just perhaps be that trigger. But purely on technical grounds, 525 was a resistance for PFC. It's taken that out convincingly. So that level now acts as a support zone. So with a stop loss of 520, you could consider a long move on PFC. The targets here will be 545, 555 zones. So PFC also has given that breakout. Even REC, for that matter, it was consolidating between that 50-day and the 20-day moving average, has given that breakout. Now the support zone will come in at 600. So that acting as your stop loss, you could play for a positional bet around that 650 mark. There could be a possibility that after the kind of breakout move that we've seen, perhaps tomorrow might be a day of consolidation. But on the whole, it looks like the much needed trigger has come about. And technically, at least speaking, both these stocks have broken out of the recent range that they were trading in firmly.
Kush, I just wanted to know your take on Z, and it's interesting. I'm looking at the Sony release as well, which has come, and they've actually sent a joint press release, Sony and Z, which is amazing considering how bitter their fight had gotten. And what is the key takeaway here is where they say, under the terms of the settlement, none of the parties will have any outstanding or continuing obligations or liabilities to the other. The settlement stems from a mutual understanding between the companies to independently pursue future growth opportunities. I mean, talk about a very pleasant, amicable divorce there before the wedding even took place. So that's worked out well, and you've seen a insane spike in the Z stock, which has continued even after the first few minutes. Which is why I want to know your view, Kush. I mean, is there a breakout that you're seeing on the charts?
First up, a beautiful analogy of the divorce, even before the marriage took place. But I don't know who's getting richer, after this. Certainly seems like these
let me put it this way: neither are getting poorer. They were in court to say that one owes the other about $90 million for who broke it off first. Now they've both said, "Ki chalo, let's go our separate ways. Good luck to you, and let's get on with it." So that's where the positivity or the positive news lies. That sword hanging over Z's head as the listed entity financially just goes off.
In fact, when this deal was happening, I was tracking this stock very closely. Never initiated a buy call even then, because there was a lot of hangover. There was a lot of a dilly-dally. Most of the news that came out weren't really as positive. Now, while this is a positive trigger, might seem like a big sword hanging over their head has been taken off, which it is. But really, from a price perspective, why would I take something that's not made any or not making anyone any poorer? I would rather go for something that makes me richer, right? Z doesn't seem to fall in that category. Now, that said, never say never. I think 165, it's a little far off, but I'll keep that as a threshold. Once that is taken out, a lot of supply hangover for the last 3, maybe 5 months, that kind of time horizon, that will be taken out. Beyond that is when I probably might get a little constructive on Z. Up until then, it's a wait and watch, broadish territory. I've got plenty of other stocks to trade where the move is way more convincing.
Where are the plenty other stocks where you're seeing the momentum?
Oh, absolutely. ICICI, Lombard, HDFC, AMC, a couple of stocks that we already discussed. We didn't make a trade out of that. Orion Pro was a stock, that we've discussed, a couple of times. So a lot of these names, right? Why would you want to get into something which is as murky as Z is right now, or at least in the price movement hasn't really given that very clear breakout?
All right, stay on with us, Kush. Another space which has absolutely been buzzing, and actually JSW Steel more than anything else, is because of a report that Jeffries put out on India ports. Yeah, JSW Infra, beg your pardon, has been buzzing because of that report, 6.5% up. They have put out a report rating Adani Ports and JSW Infra. They have an underperform on Gujarat Pipavav. Anushi joins us with a detailed view on that.
Hey Tamanna, so quite an interesting view that we are seeing coming on for the overall Indian ports as we speak. Now before we go to the price targets of the specific companies, let me just give a few details on what we can expect for these Indian ports and what's the trajectory going forward. Now Jeffrey believes that all India port cargo is expected to see about a 6% of a CAGR growth between FY24 to 23 period. Now this, in contrast to what has been happening in the last couple of 10 years, this is slightly higher growth that we are looking at, 5% growth that we have seen in the last 10 years itself. Even this is on the back of the private sector ports which are making strong expansion, which includes the names like Adani Port, JSW Infra, and even Dubai Port expanding their operations coming over here. But now what the brokerage has seen, what have they given as a price target? So Adani Ports continues to remain as a favorable one here with 1,910 of a target price, 28% upside that we are looking at. They have now initiated a buy call on JSW Infra with a price target of 375, implying about 21% upside from current levels. But on the Gujarat Pipavav, they continue to maintain an underperform rating, seeing about a 39.6% of a downside. But going forward, now let's break down company-wise on how these three companies are expected to see their growth going forward. So I'll start off with JSW Infrastructure first. 20% of an EBITDA CAGR growth that is being visible at current juncture. So this implies, this is excluding the potential inorganic opportunities which takes place, and this is on the back of some strong capacity additions that they're making. 2.4x of a capacity addition that we are looking at, implying about 400 million tons of capacity compared to about 170 million tons that they hold. This is by FY30 that the target is. Other than that also, as mentioned, EBITDA growth remains on a strong trajectory. Only downside risk over here can be the delay in the group capex plans, which can lead to this capacity addition plans to get deferred. Now coming to Adani Ports here, Adani Ports has remained as a market leader. It has a dominant share here, with about 27% of a market share as we speak. So strong growth already there for Adani Ports. They've maintained their double-digit guidance also going forward. EBITDA growth of about 15% on this is on back of the volumes and operating leverage that has been kicking off for a couple of years now. So that was on Adani Ports. Now coming to Gujarat Pipavav Port, here instead of seeing the kind of performance that they have posted, because of how the question here comes on the market share, given that Adani Group has a strong foothold in the Mundra port, so market share expansion remains as a question mark. Even the current target which the company has given, which Jeffries has given, does not factor in extension of their existing concessions. So that also remains on a watch out for on what the future trajectory of the company holds. So this was the overall outline on all these three companies. But let's look at the market opportunities going forward for the port companies. So if you look at the current capacity, about 1.5 billion ton of cargo is the current capacity. This is along the 7,000 kilometer of coastline that we are looking at. Government is planning to take this to up to 1.8 to 2.5 billion ton cargo by FY30, in which Jeffries sees this number coming up to about 2.2 to 2.4 as we speak. And now in this also, this will be driven by a couple of products over here, petroleum products, coal, including coast shipping, key other bulk drivers which will lead to this growth, and the extended capacity, additional capacity that we are seeing, 80% of this is being driven by the private ports as we speak. So again, focus remains on Adani Ports, JSW Infra, Gujarat Pipavav. But now let's look at the revenue growth that the companies have posted and what it is projected to grow forward. So if you look at JSW Infra, a standout over here, JSW, Adani Ports both, with about 23.6% and 34.7% respectively between 20 to 24, while in 24 to 30, Jeffries expects a 15.1% of a growth for Adani Ports. This is in terms of revenue, while for JSW Infra, they see about a 20.5% growth. This in comparison with Gujarat Pipavav. Gujarat Pipavav is a laggard in terms of revenue CAGR over years, 7.7% in 20 to 24, while over 24 to 30, it's estimated that they'll grow at a rate of 17.4%. Coming to volumes, Adani Ports is a clear standout, 420 million tons that they're currently handling. This is 1/4 of which is currently being handled by JSW Infra, which is about at 107 million ton, and Gujarat Pipavav currently handling about 16 million ton. So this was on the financial performance and the volumes. Last leg, let's talk about the valuations. JSW Infra, higher valuations as we speak compared to the other two, 53.3x of a P multiple that we are looking at for FY24, which is expected to go down to 46x and 44.7x. While if we compare that to Adani Ports, that is at about 36.2x, which is expected to go down to 24.8x by FY26, and Gujarat Pipavav 28.2x of a PE multiple, which is expected to come down at 19.7x. So this is the valuations, the financial performance, what's happening in the Indian ports, the capacity additions that we are looking at, and why Jefferies is in favor of JSW Infrastructure and why the stock is buzzing on the back of the initiating buy coverage that we are looking at, 6 to 7% up in trade today. Back to you.
Comprehensive. Thank you so much for that, Anushi. Let me go across to Kush. Kush, all three of these have given 90% plus returns over the last 12 months. They've been strong performers. Of course, JSW Infra has doubled, but and maybe the listing was in October, so maybe not the full 12 months, but has doubled nonetheless. Your sense with regard to a couple of these, especially on charts?
So as far as Gujarat Pipavav and Adani Ports go, there is still this consolidation phase going on. They haven't really had the trigger that JSW Infra has just received. But I think I'll wait for any kind of trade initiation. The good thing is that both of them are taking support near the 20-day moving average mark. Adani Ports just slipped below that. So hence I would perhaps just wait, see if the tide indeed is turning. Again, if I'm looking for silver linings, the volumes on the downside seem to be thinning, which means that perhaps we are seeing the end of the sell-off or the consolidation rally, and the stocks could turn a corner. But I wouldn't want to be preemptive here. So Adani Ports and GPPL, we'll put on the wait and watch list. As far as JSW Infra goes, yes, the stocks had a good move today, but now it's at the juncture where the falling trendline resistance comes about. 335 is that level. If you see, the high for the stock is also fairly close to that level. So no fresh initiation, but if you've got if you've got any holdings, please do continue to hold. Your stop loss will now be around 315, or the trailing stop loss in that case will be around 315.
Okay, Kush, just with regard to fundamentals, right? And of course, we'll take an analyst view on this as well. But just with regard to fundamentals, of course, JSW relying more or leaning more on JSW Group, especially JSW Steel, with regard to exports from their port. And Adani Ports in that sense is slightly more diversified in terms of the play. GPPL, of course, facing some amount of competition as well from both of these port players in the private space, and therefore leaving themselves slightly vulnerable. Caveat, NDTV Group is owned by the Adani Media Group, which is part of Adani Group. Anyway, so, well, first off, thank you for that, Kush, for breaking that down quite comprehensively in terms of play. Let's pull up some of the auto stocks, because you have a flash at the bottom of your screen. We have CV and PV makers were going to offer discounts for new vehicles against scrapping of older ones. That's essentially what's coming through. Auto stocks, well, no real impact that we can see per se, but we're at the day's low where the Nifty Auto is concerned. Of course, Maruti very close to the day's high or just off the day's high, but M&M also almost very, very close to the day's low. But that's where we are, and we'll continue to follow on that story. But let's quickly switch focus. Earlier today, we spoke with market veteran and global investor Jim Rogers, and he talks about...
Back in history, things like this often happen, and then they lead to big, big problems. And we have a lot of small worries, small wars right now. Unfortunately, history shows that small wars often turn into big wars. So I'm worried. I hope you're worried. I certainly see what you see. Stock markets around the world are making new highs. Nearly all stock markets. I mean, China's down, but most other markets are strong. So everybody's happy. Unfortunately, I have learned that when everybody's happy, usually something happens to make people unhappy. I hope it's not war. I don't know what it's going to be. But the United States, all stock, well, even China, I mean, even Japan. Japan was down for nearly 40 years. And even Japan is making new highs, has made new highs. So I like that everybody's happy, but I also worry when everybody's happy.
Well, that conversation with Jim Rogers is one that you shouldn't miss. We'll actually play it out at 3:30 today, right after markets close. So watch out for that. Very short break, but as we go into the break, let's just pull up Paras Defense very quickly. They've approved raising of up to 200 crore rupees via QIP. This is the time of the market where everyone is into a fundraise. We'll talk more about Paras Defense and what should be your top BTST ideas after this break. Welcome back. You're watching India Market Close. Quick market check, and we're seeming steady actually. Midcap 150 is improved and is having a fairly decent day, about 0.5% up. That's the midcap index. Even the small cap stocks are doing okay today. It's the front lines which are suffering a little bit. The Nifty small cap 250 nearly a percentage up. The Nifty pretty much holding on. Hemang Jani joins us now for what should be the strategy in this market. But Hemang, I want to start by asking you about autos. Maruti having a great day after comments from RC Bhargav at the AGM, and we'll get a more detailed report on that. Just a few minutes ago, we flashed this commentary from Nitin Gadkari, the union minister. He's actually put this out on X, where he said that after conversations with CM, the Automobile Manufacturers Organization, they have decided that they will have a swap, that you will get a discount on any new car you buy if you scrap your old one. Remember, this is something they've been trying to put into place for a while. Just wanted to get your thoughts on, how much of a game changer this could be for auto companies, and how do you feel about Maruti?
Yeah, good afternoon, Tamanna. Thanks for having me. Clearly, I think this has come as a positive surprise for the PV manufacturers, and I do think that there is going to be a certain amount of benefit that the companies would get, because we all know that typically people are reluctant to kind of sell off their cars, and if there is a 2 or 3% kind of additional impact that one would get because of this move. Surely it will be, a very big positive trigger for somebody like Maruti. In fact, even the other car companies also. But for some of the listed companies like Mahindra, they have a SUV portfolio, and the time frame for which their portfolio is in place is not too long. So I think Maruti would be a clear beneficiary here. Apart from that, Tamanna, the fact that some of the states also had incentivized the electric vehicles, stroke hybrid vehicles, where Maruti has a significant portfolio, I think that would also be a big positive for Maruti.
So you are positive on Maruti. Just stay on with us, Hemang. In fact, Puneet is joining us for more on Maruti. He's been tracking all the comments made by Chairman RC Bhargav at the annual general meet, especially when he says the company will roll out 6 EV models by 2031. Puneet, I found that interesting, considering, consistently in conversations with us, Mr. Bhargav has not been too gung-ho about EVs. He said if there is a requirement in the market, I'll come into it.
Well, definitely, and apart from that, this one line specifically that electric cars are a priority objective of Maruti Suzuki, something that's never heard of before. So really positive to see that there's a stance change, or maybe just getting positive on the new launch as well. So apart from that, 2 key comments that he made: small cars are here to stay. That is a theme that has been constant going on and is going to continue year on as well. He mentioned that, they'll be increasing the rural sales for as well. But as you rightly said, the comments on the electrification space were very key. He mentioned that 6 key new EVs by 2030. This had been mentioned before in the couple of conference calls as well, post results. He's saying that hybrid cars aren't going to be a conflict. Now that's also continuing its stance. But this particular priority objective, EVs being a priority objective, is something new, something that hasn't been said much before by Maruti. They mentioned that first electric car will enter production in the first few months, and they are targeting launch by Q4 or potentially Q1 of FY26. The other key aspect he highlighted was on exports. Maruti is targeting exports of roughly around 3 lakh cars in this particular year versus 2.8 lakhs in the previous year. Totally, they sell about 21 to 22 odd lakh cars in a year, so that's around 20% or getting towards that range in particular this time. He's mentioned that key export geographies such as Europe, US as well as Japan are now opening up to Maruti cars on the SUV side as well, and they've started exporting the Fronx in this particular fiscal year. And he mentioned that by FY30 they are targeting total 8 lakh cars will be exported, and total sales are estimated to be around 40 lakhs. So getting to the 20% export range is something that they're targeting by FY30. Very positive. In comparison, Hyundai is already exporting 24% and is the highest. So but Maruti is the number 2 player, coming at roughly 10% of exports. So they want to double the exports by FY30, and these are some key comments that he made at the AGM for electrification as well as EV exports. Back to you.
Right. Okay. So that's, of course, everything with regard to Maruti's stock. A buzz almost 2% plus higher. Kush, let me come to you before I go across and take a fundamental view on this one. How is Maruti looking on charts?
So nothing exciting, Harsh. It's been in a range, and the broad range is 12,000 on the downside and 13,000 on the upside, and it's somewhere bang in the middle of that range right now. The move that we're seeing today, might have taken it above some of the key averages, and the smaller resistance zones, so to speak, of 12,350. But it's not on the back of great volumes. So as I said, all in all, while it might be a good 2% up move on the day when some of the other auto names haven't really done much, it's not really as encouraging. Plus, as I said, the risk reward ratio is 1:1, doesn't really appeal as much. For anyone who's got an existing position, could continue to ride, but I wouldn't suggest a fresh entry.
Hemang, you're looking Maruti more constructively, if at all?
Yeah, we have a positive view, and I think apart from the statements given by Mr. Gadkari, the fact that certain states had incentivized the hybrid companies where Maruti has a very strong portfolio, so there is going to be an incremental benefit because of that also. And we do think that the festive season, which is underway, there is going to be a good amount of traction on the passenger vehicles. So I think combining all these together with the fact that Maruti has not been one of the best performing stocks, I think at current price point, we have a positive outlook there.
Let me also go across to Puneet, because there's a tweet that's flashing on your screen by Nitin Gadkari with regard to the move on scrapping. Let me allow Puneet to explain that better before we go and we take a possible look at the impact as well. Puneet.
Well, thanks for that. So, a very important tweet coming in. They have been, the central government has been talking about, doing something more on the scrappage policy. And this conversation that Mr. Gadkari had with the CM CEO, emphasizing and getting newer discounts for scrapping older vehicles is something that's not been spoken of before. So, a key objective here. We did speak about, the car makers being beneficial, someone like a Maruti. I also want to talk about that they mentioned that commercial vehicles will also be part of this particular aspect. We won't know the impact currently, how much of that would be, but there are a lot of players and especially fleet operators that operate these trucks which are older than 15 years as well as 20 years. Now, those were one of the key things that were targeted in the scrappage policy scheme earlier also that they mentioned, and beneficiary players of this would be someone like an Ashok Leyland, Tata Motors as well on the CV side, where the aged vehicles or the 20 plus vehicles, truck vehicles will be scrapped, and it will be important to see what kind of discounts they have, because currently if we see specifically for the commercial vehicle industry, there aren't much that's happening on the discounting side. The demand has been slow but has been steady, and there just like back in 2019, 2018, the previous cycles, there used to be a lot of price wars. That's nothing of those sorts are happening right now. So some kind of respite on discounts of newer purchases for fleet operators, and incentivizing them to give up their older trucks will be something, I think, one of the key positives coming out of this particular tweet. For passenger vehicles specifically, we have seen that the inventory buildup has been a lot. FADA says it's 7 lakh. Bernstein has been constructed. They say it's around the 5.5 lakh range. And there has already been some discounts happening right now. So it'll be important to see if these particular discounts on newer vehicles for scrapping older ones is something over and above that or continuing the effort. But I think commercial vehicles will be one of the key beneficiaries of this. Back to you.
Okay, so let's see what M&M is doing. Let's see what Tata Motors is doing, if there's any reaction at all. Maruti, of course, has been up and buzzing for various other reasons, but let's see if any of these other auto counters are also buzzing as well. M&M, I said, Tata Motors, nothing much happening there in the commercial vehicle space. Tamo is also down about 1.5%, and I think some of the concern might also be that what is the extent of discount? Yeah, Ashok Leyland also not too much activity, because if you're going to have a 2 to 3% discount on, and the idea is for people to get rid of their very, very old cars that deserve to be scrapped, but they're holding on to them because the cost of a new one has gone up exponentially. So that's one thing that you have to see as well. So yeah, the impact of this for OEMs and when it's coming by will have to be seen. All right, the other pack that we're talking about is OMCs, and we'll just quickly run through this before I get Mihika in. Let's see what HPCL, BPCL are doing. Oil India, by the way, has had a fantastic day, as has ONGC after pairing off a bit. BPCL still about 0.5% down. Oil India is still about 2.5% up. So I think the big story over here is what's happening with crude. And you had an almost 3% upside on crude overnight because Libya has halted production. And there are concerns that the tensions in the Middle East will escalate. What is the impact of all of this uncertainty for Indian oil marketing companies? Meka joining us with more on this. Yes, Meka.
Yeah. Oil marketing companies did have a very volatile day in trade today. They started off with 2% of losses, but they recovered and now it's fairly flat. And the major reason why the oil OMCs have been under pressure, like you mentioned, has been the higher crude prices. Now prices rose 3.24% intraday in trade yesterday to $81.58 per barrel, and Brent prices have been up 5% over Friday. Two key reasons which have been driving up oil prices. One is the Libya Eastern government, which has stated that they're going to halt oil production as well as exports. The country produced around 1.5 million barrels of oil a day last month, and this means a halt in production tightens the physical oil supply in the market. Second are the Middle Eastern tensions. Tensions have escalated, and this kind of, puts risk to oil supply. Strikes have been made by Israel as well as Hezbollah. Russian-Ukraine war has shown no signs of stopping and has entered residential areas now. And when you talk about the impact on the oil marketing companies like IOCL, BPCL and HPCL, this is negative for the companies as it puts pressure on the margins with the retail prices capped. It's mainly because India and the companies import their oil. But there is an aspect that protects the oil marketing companies. One is inventory management. OMCs maintain strategic reserves of crude oil that protect or cushion them from the sudden changes in oil prices. And second is the product diversifications. They have other value-added products like petrochemicals, lubricants, aviation fuel that allow for larger margins. And lastly, I think it's key to note that the wars like the Russian-Ukraine war have been going on for a while now. So have the Middle Eastern tensions. But there has not been a major oil supply risk, and you could also see the markets playing into that.
All right, thank you for that, Mihika, there with talking about so two factors over there. One is HPCL, BPCL, your downstream, your OMCs will suffer if crude prices go higher beyond a point, because it's unlikely they will be able to pass on all of that burden to the final consumer. But on the other hand, there is a cushion, right? We are importing still from Russia in large quantums at better prices. And of course, all of these contracts are sworn up several weeks in advance. Just want Hemang's view on the kind of impact you expect to see, and especially if you could focus on Oil India, which has been buzzing today.
You might see a little bit of volatility in the crude oil price because of the geopolitical tensions, but on an overall basis, as long as crude does not go above, let's say, $90-95, I think OMCs are in a good position. At the same time, you're seeing a bit of inventory gains that can come through because on the refining side, things are getting better. So I do have a positive view on the entire OMC space. And we think that, at current valuations, the risk reward is extremely favorable. Particularly, we prefer something like an IOC, which also has a pipeline network and a reasonably good amount of refining capacity. So IOC is our top pick within the OMC space.
Hersh, what about you? Anything you like in this pack, for a kind of a medium-term bet?
Well, as of now, it's only Oil India that's actually showing any kind of, a very clear uptrend. If you look at the other names, even ONGC for that matter, after the good up move has actually been consolidating. BPCL, HPCL have had their share of volatility, in the recent past are again consolidating. So I think Oil India is the only one that, you can consider from, let's say, near-term momentum perspective as well. On the upside, you're looking at 730, perhaps even a 750 as, the next target. 700 was a bit of a resistance, now should start acting as a support zone. So this one, as I said, the only one with a very clear, upward trajectory. The others seem to be consolidating.
Okay, let's put focus on a story that has completely gone viral. I'm talking about the IPO in the SME category for resourceful automobile. Now, everyone's been talking about this because of the kind of interest it has generated. In fact, this Yamaha dealership has been in the headlines because it's an SME, a small company with 2 showrooms and 1 workshop, which is trying to raise money in the primary markets. Now, the craze for the IPOs is such that the company has got bids worth 4,800 crore rupees. That means the IPO has been subscribed 418 times. This is, to put this in perspective, the company was trying to raise 12 crore rupees. So, what is the big deal about this dealership? My colleague Rishabh visited Resourceful Auto in Delhi to see what the hype is all about. Here's a ground report.
Right behind me is one of the two showrooms that is owned by Resourceful Automobile. Why I'm telling you this is because Resourceful Automobile's SME IPO has hit the markets and it has caused quite the flutter. This IPO worth about 12 crores has been oversubscribed by 400x, making the bids at about 4,800 crores. Now, why this is intriguing is because this company has a revenue of only about 17 crores and a profit after tax of only 1.5 crores after this is for the 11 months that have ended since February 29. What we're also seeing is that this is the trend with SME IPOs. We've seen quite a lot of bubbles like this being created, 100x, 200x, 300x, and now a 418x subscribed IPO right behind me. In terms of assets, this showroom, another showroom, and only one workshop. That's all that this company has. It has about 8 employees according to its RHP as well. It is a dealer of Yamaha motorbikes, and that is what it sort of excels in. What we're also seeing is that this operates under the Sahani Automobiles name, and the subscription is now closed. It will head for listing on August 29, and what we'll now see is whether the grey market premium holds up on listing day.
Okay. So, just to give you a sense of the kind of commentary which was coming in on it, Deepak Shenoy, a prominent market voice, tweeted on it saying that he doesn't see the big deal. He says no one is forcing you to buy into Resourceful Automobile or any IPO. You can take it as a sign of euphoria in the market, but he goes on to say it depends on how you want to see it right now. And let's look at more comments coming in. One from Ajay Roti as well, who's a tax expert, who said that it's the bankers who should be actually questioned more than anyone else, because of the kind of frenzy that has been seen. But I'm curious to know Hemang and Kush's views also on this viral story. Hemang, just, one would say, some will argue that there are many listed companies with no rhyme or reason they're going up. So why is everyone after this poor Resourceful Automobile who has negative cash flow, but they want to raise 12 crores?
Yeah, so typically, Tamanna, when the markets are at all-time high and the entire, excitement is around domestic money, people will find such companies, and this is not the first time or the last time that we are discussing about such thing. I think, more importantly, yes, investors have to be blamed. The investment bankers, the way they kind of come up with these kind of things. The excitement that's being created, definitely means that large number of, investors who are participating in the market, they are not looking into the details of the company's business, fundamentals, what kind of growth it may justify. Of course, it's a function of, price discovery is an evolving process, and sometimes we've seen new age technology companies like Nykaa, Zomato, PB Fintech getting very high valuations on the back of the platform story. So those kind of things can always happen. But here I do not find any specific trigger which will create that kind of a growth, trajectory for the company. And yet there is so much of appetite. So I think a large part of this money is a flip money. People are trying to take advantage of the listing gains and the excitement which is around that. But I think it's part and parcel of the market cycle that we have seen all these years.
Yeah. Kush, any hot take on the IPO frenzy?
I've never been excited about any IPO for that matter, because if the IPO is phenomenal, then you won't get any allotment and hence make very little or no returns, correct? And if it's a dud and you do get an allotment, then perhaps it's not really worth applying for in the first place. So I've never been a big fan of IPOs, at least in terms of trading the way a lot of retail participants have been doing. But I think this is what happens when there is a lot of money chasing a lot of very few ideas. perhaps that take. So not being a big fan of IPOs, this just, puts an extra case in the point for my argument. I would just perhaps, trade or invest more in whatever's available in the secondary market.
Right. Clutch of other stocks buzzing in trade today. Pretty much quite a few Tata Group stocks doing very, very well. Tata Investment Corporation, Tejas Networks, if we can just quickly pull some of those up. Tata Tech doing well as well. Tata Elixir is up, 13% odd the last I had checked. 17.5% now on Tata Elixir. Himang, if I can come to you on this one, stock on a tear?
Yeah, so basically what we have seen is that some of the mid-cap IT companies have started showing a lot of momentum, and we had seen some action come through in Persistent, KPIT and, a couple of those companies. So Tata Elxsi used to be a very high beta stock at one point. Then because of the stretch valuations, it went through its own sort of consolidation. Now, people are getting a little excited, maybe partly because of the way, the block deals have happened in case of Tata Technology. There is also a possibility of some sort of a cleanup or, simplification of structure between TCS, Tata Elxsi, and Tata Technology, which are basically in the same line of business. So you will see all these, things being talked about it. But to be very honest, Tata Elxsi in terms of valuations is still looking stretched. Tata Technology is something that, people were so much excited at one point, but we are yet to see any meaningful, numbers being displayed by the company or the business model per se. So not too positive on those names.
Kush, what would be the BTST call for tomorrow's day? Let's put in, strategy for indices as well as stock calls.
Sure. I think, Hersh and Himang have given me a brilliant segue into the BTST, idea, which is Tata Technologies. It's broken. Yeah, it's broken above the falling trend line. We know the volumes are part of a couple of deals. But other than that, I think, the price action itself is very convincing. There has been this base formation around the 1,000 mark. So I think from a positional standpoint, 1175 is the target to look at. You can place your stop loss close to 1050 mark. So even after this kind of move, the risk reward ratio seems fairly favorable. So that is one. The other one is Indian Hotels. Very, very smart move on this one. After 2 months, the stock actually has come up to, new high 653 thereabout was the previous high. And today, but on the back of, fairly okay volumes, but the move actually has been very encouraging. Yesterday, a couple of days ago, we saw a good volume on this one. So Indian Hotels is something that you want to keep on your radar from a BTST perspective, from a positional trade perspective. 685 is the target, and you can place your stop loss close to 655 levels. As far as the indices go, very honestly, I do see some sort of consolidation up until the expiry is over. So I wouldn't suggest, buying any calls or even puts for that matter. The theta just might, erode a little too fast on these.
All right. That's. Thank you so much, Kush and Himang, for speaking with us on the show today. It's going to be a largely uneventful close for the day, I would say. And let's just pull up and see where the index is going, struggling to stay above 25,000 and perhaps not really managing to right now. We're looking like we might close slightly below the 25,000 mark, and it's been that kind of day, isn't it? Let's pull up the advanced decline ratio for you, just to give you a sense of what's been happening overall in the markets. Broader markets doing slightly better, which is why you're seeing advances beating declines, not by much, but 1136 to 948. So advances coming on top right now. If I were to pull up for you the heat map, you'll get a sense of what is working. And there is a bit of buzz in the financials, I would say. Bajaj Finserv, SBI Life, Shriram Finance, HDFC Life, Bajaj Fin. So this NBFC insurance sort of combo is working. Maruti is one of the smart movers of the day. Is there a refocus from Maruti is the question. 6 EV products are going to be out by 2030, and it's now become a priority for a company that so far was saying that, EVs perhaps not such a big deal. So that's interesting. Market seems to like that. Bajaj Auto has continued to do well last couple of sessions as well. On the sell side, you have JSW Steel, which is seeing a bit of pressure. Titan, HUL, Grasim. So a lot of your consumables or your consumption stories are not doing too well. ITC as well. BPCL probably facing a bit of pressure because of spike in crude prices. But there you have it. You have closed below the 25,000 mark. I just pull up your mid-cap and small-cap indices before we go to what's happening in the broader markets and the NSE 500 list. The mid-cap index actually faring better, about 0.5% up. Let's go to the small-cap index. That's about 0.75% up. So small-cap 250 has actually done well relatively. Let's pull up the top gainers and losers in the broader markets, and definitely some interesting stories that popped up right at the end of trade. So Tata Invest, Tata Elxsi, they're doing fine. We talked a bit about that as well. Tata Group company is buzzing. So even Tata Teleserve about 8.5%. One interesting story. So the dispute with Sony is done, and they've decided to walk away without any kind of penalty on either side. So that's been seen as a positive. On the losing side, you have a mix really over there. Minda Corp, Polyplex, Uflex are some of those that are not doing too well in trade. So all in all, a so-so kind of day. But remember, sometimes no news is also good news. And that really is kind of the theme of the market today. We'll wait and see how it pans out tomorrow, where there is a lack of any clear cues or triggers that the market is facing. So the stories become more and more stock specific. But for now, that's all the time we have on India Market Close. Thank you so much for joining us, but stay tuned. Lots more coming up on the other side on NDTV Profit.